So who doesn't love strolling through those aisles of Macy's and Costco? This one certainly does.
All the time.
Those aisles, however, may be shrinking due to Biden's inflating economy. Both businesses and others are pulling back at their stores and changing what they buy. A Macy's spokesperson on Thursday said the company cut its annual profit and sales forecast after customer demand slowed.
Then Costco finance chief Richard Galanti said last week that some customers were switching from pricier steaks and beef for cheaper meats like pork and chicken. Well, here to discuss America's economy is economist John Jordan. He is also a board member of Overseers at Stanford University's Hoover Institute and former mayor of Cranston, Rhode Island, and 2024 presidential candidate Steve Laffey. Gentlemen, welcome to the show. And we're also bringing in our special guest host of What's Bugging Me podcast and media strategist, Dennis Neal. So welcome, everyone. John, I do want to start with you first. How much of a red flag is it by Macy's and Costco to scale back products for customers?
It's a big one. The American consumer is 70% of our economy. And what you're seeing now, this is a far richer data set than people otherwise would realize. What consumer preferences and buying habits are a leading indicator of where the economy is going. Macy's in-store sales are now dropping 8.7% per management, and Macy's is more of a high-end luxury goods. So they're just dropping in sales. Costco is even more interesting. Costco's are everywhere. They're ubiquitous, huge part of American life. And what they're seeing there, because of Costco's broad product offering, is people trading down from more expensive items to cheaper ones. In economics, we call that substitution. So this is a harbinger of an economics deceleration that hasn't quite made itself into the job market yet, but is on its way.
So, Steve, do you believe that American wages are keeping up with the inflation rate in the United States?
No, they are not. They haven't for a long time. Under the Trump administration, to his credit, they did. Wages were ahead of inflation. Inflation was low. Since President Biden became president, the middle class especially is being hosed. The wages are running far below the last 3 years or so with the inflation rate. To the tune of, by the way, probably $4,000 extra cost for middle class workers. So it's a disaster. The Biden administration's a disaster. And to what John was talking about, he's totally right. And if you look forward to the leading indicators, the yield curve is inverted, right? Housing starts are down 22% over the last year. You've got money supply down 5%. You got purchasing manager surveys dropping, and the Empire State Purchasing Manager Survey dropped by the largest amount in the history. We are really falling off the cliff today. Now, as we speak, unlike what the newspapers seem to say by looking at lagging indicators like the CPI or unemployment numbers.
Dennis, how do you see it?
I'm chomping at the bit here, guys, because
Yes.
Politicians and economists, they're paid to tell you what to worry about. But let me instead take the other side of this trade and look at this is the recession that never arrived. I wrote an op-ed in the Journal April of last year saying this. It still isn't here, and people are worrying and worrying. Second, the fact that Macy's, Costco are kind of adjusting downward their outlook, this is exactly what the Fed wanted. It wanted consumers to start changing their behavior so they could tamp down that inflation. 339,000 jobs in the month just recently completed when they expected only 200,000 or fewer. Incredible. So this economy is stronger than you guys think.
No, this recession has to happen if we're going to get inflation under control. Right now, inflation's running at 4.9. Wages are growing at 4.3. The American consumer is going back about 1% a year in terms of purchasing power. If we're going to bring inflation under control, a recession has to happen. There's no other way around it. Otherwise, you end up in a price-wage spiral, and this situation will only get worse. You cannot cure inflation without deceleration and probably a recession, I'm afraid.
And Steve, your thoughts on this?
John is exactly correct. The Fed has failed, and they really should just resign. The Federal Reserve's mandate must change. They have to keep inflation at zero. They have totally destroyed the middle class, literally on purpose. They know what they're doing is wrong, and the only way out of the giant debt box for them is to keep inflation running higher. And that way people will get the same check, they think, 20 years from now for Social Security, although it'll be far less in real terms. That's what they've done wrong, and they haven't raised rates far enough, fast enough. They were always behind the curve, and it's disgraceful because it's destroying the middle class.
So the short amount of time we have left, let's talk about the latest jobs report. In May, the U.S. saw a robust 339,000 jobs added, well above expectations, and evidence of strength in an economy that the Federal Reserve is desperately trying to cool. Now, does this stronger hiring month show any promise for our inflating economy? Dennis, we'll go to you first.
Deneen, this is the thing I couldn't understand, and maybe these experts can help us, because just on Friday we saw the markets. The Dow went up 700 points, the highest in a couple of years, on a very strong jobs number. But that means the Fed should be wanting to keep raising interest rates. So why did stocks rise? It's because traders, investors are deciding that this economy, maybe it can slow down without going into recession. Maybe you guys are too pessimistic. Let's sell the hope, baby.
John, real quick.
Well, first of all, what you have here is two things. The federal government right now, with its fiscal policy, which is very expansionary, big government spending, big deficits, is fighting the Fed. The Fed is having to raise interest rates because the federal government fiscal policy is so expansionary. Every time interest rates wouldn't even have to go up this high if the federal government could rein in spending. All of this can be tied directly to the massive deficits we've been running and the fact that the federal government is 30 to 40% bigger than it was pre-COVID. Every time your interest rates go up, you can blame Biden, because if they would rein in spending, interest rates wouldn't have to go so high to try to bring inflation under control.
Gentlemen, John Jordan, Steve Laffey, thank you very much for that discussion. Thank you very much.